The US dollar index DXY came under pressure as markets reassessed the Federal Reserve's policy outlook. Realizing that past voting records from Fed officials do not necessarily predict future policy decisions. The phrase "a vote record" is not a reaction function. Means that investors should focus on how policymakers respond to changing economic conditions, rather than relying on how they voted in the past. Tone. Initially, some traders expected previous hawkish voting patterns to signal continued support for higher interest rates. However, Federal Reserve officials make decisions based on incoming data, such as inflation, employment, and economic growth. As expectations shifted toward a more data-dependent approach, the US dollar lost some of its earlier strength. Markets will now pay closer attention to upcoming economic releases instead of historical policy positions. Strong inflation or labor market data could revive expectations for tighter monetary policy and support the dollar. Conversely, softer economic figures may strengthen expectations for interest rate cuts, putting renewed pressure on the US dollar index. For Forex traders, the key events to watch are US inflation data, non-farm payrolls, Federal Reserve policy meetings, speeches from Fed officials, and Treasury yield movements. These factors will determine whether the US dollar index resumes its upward trend or extends its recent pullback. Stay informed, manage your risk, and follow for more daily Forex market updates.